Okay, now we discuss with the question number 3. Question number 3, that is the question number 3 for your valuation of shares. Following is the summarized balance sheet of Chandra Limited as at 31st March 2020. Balance sheet given. Liabilities 5,000, equity share of 100 each, rupees 5 lakh, share premium 1 lakh, general reserve 3 lakh, 2 lakh 39,400. Profit and loss account 1 lakh 57,600, sundry creditors 4 lakh 9,400, and provision for taxation 1 lakh 97,000. Some assets are there: machinery 2 lakh 40,000, furniture 1 lakh, stock 6 lakh 20,000, debtors 2 lakh 6,000, cash in hand 3 lakh 4,000, and cash at bank 4 lakh 34,000. It is important to think about the whatever the adjustments are there, and these adjustments are always related with your profit. So the company transferred 20% of its profit after tax to general reserve. The net profit before taxation of last 3 years have been as follows. Year ended on 31st March 2018, 3 lakh 35,000. Year ended on 31st March 2019, 3 lakh 66,000. And year ended 31st March 2020, 3 lakh 94,000. Next adjustment is there. Machinery is valued at 3 lakh 20,000. Average yield in those type of business is 20%. That is your yield basis or your normal rate of return. The rate of tax is 50%. Calculate the value of one equity share on. So right there is no headings are there. One equity share on first point. Intrinsic value. And second one, yield worth or yield basis. And last one, third, fair value method. Okay, done. Now we discuss with the how to solve this heading with the given information. We are using the same portion for the calculating various headings. So we start with the calculation of value as per intrinsic value. First point, that is first intrinsic basis. Intrinsic basis. For calculating intrinsic basis, we need to calculate and find out what is the funds available to shareholder, and from that heading we use various calculation, that is machinery, furniture, and in this question all assets are considered except the value of your machinery. So you can go with the net asset or the asset, write down all assets at book value. Though it is not mentioned what is your book value, only machinery is valued at rupees 3,20,000. So you can use machinery value 3,20,000. Machinery 3,20,000. What is the next asset? Furniture. Furniture as it is, or there is no specification given for your adjustment, so it is recorded as rupees 1 lakh. Next, that is stock rupees 6,40,000. Sorry, 6,20,000. 6,20,000. Next heading, debtors. debtors amounted rupees 2,06,000. 6,000. Add cash. Cash in hand rupees 3,400. Cash at bank rupees 4,34,000. So this is the amount of your total asset. Total asset including whatever the changes, or you can say it must be recorded according to your uh, adjustment value. So in this case, now we're going to add or reduced addition of this heading auto sum rupees 16,83,400 is the value of your asset. Now reduce or the less. What is the amount less? First heading less number one, that is liabilities, sundry creditors. Sundry creditors mentioned in your question 4,09,400. 4,09,400. Next, provision for tax. Provision for tax, that is rupees 1,97,000. For 1,97,000. So the only two headings consider as. So make sure when we write it or reduce it, whatever the liabilities are there, only current liabilities are considered for the calculation of funds available to shareholder. So less 4,09,400 plus 1,97,000, or total of these two headings from 16,83,000. So answer will be 10,77,000. By this way, funds available to shareholder holders is rupees 10,77,000. Calculation for this 16,83,000. Sorry, 16,83,400 minus 6,06,400. That is your total of liability. 6,06,400. So your answer will be 10,77,000, and that is the your funds available to shareholder. Now we are using step 2 for the intrinsic value calculation. For the value of intrinsic calculation, that is the point number 2. Intrinsic value. As we know how to calculate intrinsic value. What is the formula? We are using intrinsic value per share
मैम ऐका ना मैम हेलो
So intrinsic value, sorry. value per share equals to intrinsic value per share equals to funds available to equity shareholder. Funds available to equity shareholder equals to funds available shareholder divided by number of equity shares. So funds available to equity shareholder, that is rupees 10,77,000 divided by 5,000. 5,000 number of equity share mentions in your question. So 10,77,000 divided by 5,000, that is your number of shares. Answer will be rupees 215.40 per shares. So this is the first calculation, or you can say it is your first calculation for intrinsic value method. So what is your first calculation or amount for this intrinsic value, and how you calculate it? Make sure when you calculate it, it is easy to understand. First, calculate the funds available to equity shareholder. Funds available to equity shareholder. This is your first step. By this way, we are using calculate the net asset or asset given in your heading, or calculate assets given in your adjustment. Only machinery is valued upward, that is machinery, and all other assets are considered. It is taken at book value, and that's why it is recorded as it is value or the balance sheet value. Then less whatever the liability, make sure it should be current liability, sundry creditors, provision for tax, and whatever the any if any other liabilities which is not considered here. Make sure equity share capital, share premium, general reserve, profit and loss account are not considered for the calculation of funds available to equity shareholder or the funds available for the shareholder. But with in your question, if the preference share is present, it is reduced after this calculation, that is the net asset less liability. Again, one more word is there, if the preference share available less preference share capital, and whatever the answer is there, that is called funds available to shareholders, or you can say funds available to equity shareholders. So in this question, preference share are not mentioned in your question, and that's why we are not considered here. And just go through the net asset or the valuation of asset, releasable value of assets. If any assets are not mentioned in your adjustment, you can consider it from your book value or your balance sheet value. Less creditors, that is your current liability, and provision for tax, you will get your funds available to shareholder. Now we are using the step number 2 for the calculation number 1, intrinsic value per share. While we calculate the intrinsic value per share, formula for this, funds available to equity shareholders divided by number of equity shares, and make sure it is always mentioned in your question how much number of equity share present in your balance sheet or business. So 10,77,000 divided by 5,000, you will get your first answer, that is the calculation of intrinsic value per share. Now we calculate the step number or point number 2, that is yield basis. Visible आहे का? Sorry. Sorry, don't answer. Yield basis. Now we use the second method, that is for yield basis. So what is the calculation for this? You need either dividend rate or profit. But in your question, they mentions you the profit for 3 years. Now we go through this calculation, find out the average profit first, calculate the net profit for 3 years, and step number 1 in this heading, or you can write A. First point, average profit. Average profit will be calculated by the profit for 3 years. There are 3 years profit are given. Year 2018, 19, and 2018. What is your profit? Profit for 2018, that is 3,35,000. Profit for 2019, rupees 3,66,000. And 2020 profit rupees 3,94,000. Now total profit for 3 years. Total of these 3 years, 10,95,000. So this is your total profit. Now average profit. Average profit equals to 10,95,000 divides by number of years, that is 3 years. Your answer will be, average profit will be 3,65,000. So this is your average profit. How we calculate this heading? 3,65,000. That is your average profit. You calculate with the formula. First calculate, add all the profit, all years profit, and then find out the total profit for given years divided by number of years. Now we use this heading for the calculation of the next point, average profit, that is 3,65,000. First heading, heading number 1, that is transferred to. The heading mentions you, it is transferred to. So the next point for the calculation, read your adjustment. Adjustment number 1, the company transferred 25% of its profit after tax to reserve, but make sure you are not transferring any amount still to the tax heading. So 50% rate of tax is mentioned to you. So use it less provision for provision for tax, and 50. What is the amount percentage? That is 50%. So what is the 50%? It is the 50% of 3,65,000. That is your average profit. 3,65,000. 50% of 3,65,000, you will get 1,85,000. 85,500. 1,85,500. Sorry. Wait for some time. Three lakh 65,000 into 50%. Yes, 3,65,000 into 50%. 1,82,500. My mistake. 1,82,500. This is your tax amount. And what is the profit profit after tax? This is the amount for profit after tax. It will be the same 1,00,000.
Oh.
1,82,500. 1,82,500. So this is your calculation. Profit after tax 1,82,500. Now, what is the next heading? Less 20% off. Transfer to general reserve. Transfer to general reserve. So what is the amount you have to transfer to general reserve? 20% off. Which amount? Make sure this is your profit after tax, and 20% of profit after tax must be transferred to general reserve. So what is the amount? Less in bracket transfer 20%. 20% of 1,82,500. Bracket close. 36,500. So what is the amount of transfer to general reserve? 36,500. So by this way, you are minus it 36,500 out of the profit after tax. First, calculate your average profit. Average profit will be calculated by 3 years, whatever the years given, divided by number of years. Total of all years profit. If loss is there, it should be reduced from this amount. Profit divided by number of years, it will give you average profit. Now use the, if any tax amounts is there, tax percentage given that 50% of profit. So 50% of 3,65,000, you will get your answer 1,82,500. That is your tax amount. So when you reduce 3,65,000 less tax, you will get profit after tax 1,82,500. 1,82,500 again reduce 20% transfer to general reserve. It must be calculated on 1,82,500. That is the profit after tax. So answer for whatever the answer is there, two equity profits available to shareholder. That is 1,46,000. 1,46,000 is the amount which is remain or the available for profits available for shareholders. So by this way, we are calculating our second heading, first point, second calculation or calculation of yield basis by method of average profit. Now we use this heading for the calculating our profit or NRR method. second or B point, total capitalized value of profit capitalized value of profit. Now we use the formula for capitalized value of profit. Formula, capitalized value of profit, profit available, profit to shareholders into 100 or into NRR, that is normal rate of return, NRR. So what is NRR? It is mentioned in your question. Check this. Average yield in those type of business is 20%. So this 20% is your NRR percentage. So now we use this formula, profit to shareholder, that is 1,46,000 into NRR, or you can say, into 100 divides NRR. So in this calculation, 1,46,000 into 100 divides 20, that is 20%. So your answer will be capitalized value of profit. Your answer for this calculation will be 7,30,000. So capitalized value of profit 7,30,000. Now we use formula for calculating value as per yield basis. Formula, capitalized value divided by number of equity shares, number of equity shares. Capitalized value 7,30,000 divides by 5,000 number of equity shares. So your answer for per share equals to 146 rupees. 146. This is the calculation of 2 or the point number 2. Now we calculate with the third point. Third calculation, that is fair value method. Fair value method will be calculated by intrinsic method, intrinsic value plus yield basis. So by this way, intrinsic value will be calculated. That is the first calculations answer, that is 215.40 per share. 215.40 plus 146 divides 2. Your answer will be fair value per share rupees 180. 180 per 80.70 per shares. So this is your last answer, calculation of per share. While we calculate, now we discuss with the first intrinsic value, calculate with the asset minus liability. Formula of funds available to equity shareholder divided by number of equity share. Then we use yield basis method. In this method, we calculate profit, average profit, whatever the profit given divided by number of years, average profit, less provision for tax, percentage given on that heading, use for the what is the average profit. Then profit after tax less whatever the transfer to general reserve, 20% transfer to reserve. Use the formula funds profit available to shareholder. Make it capitalized value of profit. Capitalized value of profit will be calculated profit to shareholder. That is the profit available to shareholder into 100 divided by NRR. NRR means the percentage mentioned in your question. So 1,46,000 into 100 divided by 20. 7,30,000 is the capitalized value of profit. Then we use yield basis formula per share value. Yield basis per share value is equal to capitalized value divided by number of equity share. So you will get per share value rupees 146. This amount, and now we use the third method or calculate the third method, that is the fair value method, equals to intrinsic value plus yield basis 215.40, that is the calculation number one, our first method answer, plus 146, the answer for the second method, divided by 2 is equal to 180.70 per share. That is the fair value method, fair value per share of business. By this way, we are calculating our fair value calculation.